Can a company rise from a massive accounting scandal to become the largest coffee chain in China, even surpassing Starbucks? Today we're diving into Luckin Coffee, the comeback story of a lifetime. Before we start, a quick disclaimer. This video is not financial advice. I'm not a licensed advisor, and investing carries risks. Let's rewind for a moment. In 2020, Luckin was caught in one of China's biggest corporate scandals, fabricating over 2.12 billion renminbi in sales. The company was delisted from NASDAQ. Its executives were fired, and its stock price crashed by over 90%. But instead of disappearing, Luckin rebuilt itself by restructuring debts, overhauling management, and revamping its internal controls. By 2022, the company was back to profitability, and by 2024, it became China's #1 coffee chain by store count and daily cup sales. This turnaround is now studied as a case of corporate rebirth, from fraud to dominance. Luckin Coffee, trading under the ticker LKNCY on the OTC market, is a China-based coffee company founded in 2017 and headquartered in Xiamen, Fujian. As of Q3 2025, Luckin Coffee had a total of 29,214 stores, making it the largest coffee chain in China, surpassing Starbucks. Luckin's business is built on affordability, digital convenience, and local innovation. Its goal? To make premium coffee accessible to every Chinese consumer through a mobile-first, tech-driven model. Luckin's business model rests on two main pillars. First, self-operated stores drive consistent product quality and brand control. Second, partnership stores or franchises accelerate expansion with lower capital costs. Every cup of Luckin Coffee is ordered digitally through the Luckin app or WeChat mini program, giving the company a powerful data engine to track demand, pricing, and customer behavior in real time. In short, Luckin is less a coffee company and more a technology-driven retail platform built around caffeine. The company is led by Dr. Gua Jin-yi, co-founder and CEO, who took charge after the 2020 crisis. Under his leadership, Luckin implemented a new management structure, rebuilt its financial integrity, and focused on operational excellence. The new leadership team has repositioned Luckin as a data-driven, efficiency-focused growth company. Now, let's break down Luckin's revenue mix for Q3 2025. During the period, Luckin generated 15.3 billion renminbi in total net revenue, driven mainly by its self-operated stores. Self-operated stores contribute about 72%, or 11.1 billion renminbi, reflecting Luckin's strong control over store operations and product consistency. Partnership stores accounted for 25%, or around 3.8 billion renminbi. This segment continues to grow quickly, enabling rapid expansion with lower capital requirements. Other revenue made up roughly 3%, or 0.4 billion renminbi. Overall, this mix highlights Luckin's balanced strategy, maintaining profitability through self-operated outlets, while leveraging partnerships to scale faster across China. Luckin Coffee's rise has been nothing short of incredible. Back in 2021, the company had just over 6,024 stores, still rebuilding its reputation after the scandal. But Luckin didn't slow down. By 2022, it reached 8,214 stores. And in 2023, it exploded past 16,248, doubling in just a single year. By 2024, Luckin had a total of 22,340 stores, officially overtaking Starbucks to become China's largest coffee chain. The story doesn't end there. As of Q3 2025, Luckin Coffee's global footprint reached 29,214 stores. Now let's look at Luckin's coffee store network in Q3 2025. In China alone, the company had 29,096 stores. Luckin started its international expansion journey in 2024, and by Q3 2025, it had grown to 118 overseas stores, including 68 in Singapore, 45 in Malaysia, and 5 in the United States, launched in June 2025, marking Luckin's bold face-off with Starbucks on its own home turf. One key metric to pay attention to is same-store sales growth. In early 2024, same-store sales growth dropped 20.3% in Q1 and 20.9% in Q2 as intense price wars dragged down traffic. The decline began to stabilize later in the year, improving to minus 13.1% in Q3 and minus 3.4% in Q4. Then came the rebound, plus 8.1% in Q1 2025, plus 13.4% in Q2, and plus 14.4% in Q3. From steep losses to double-digit growth in just 1 year, Luckin's turnaround has been remarkable, driven by its scale, operational efficiency, and product innovation. Luckin's growth is fueled by relentless innovation. In 2024, the company launched over 90 new beverages. In Q3 2025, it introduced nearly 30 new drinks, blending high-quality coffee with trend-driven flavors. Its signature drink, the Little Butter Series, has now surpassed 220 million cups sold in its first year. Other hits include Coconut Latte, Pineapple Americano, and Lychee Americano. Luckin continues to emphasize professional, young, fashionable, and healthy brand positioning. Let's move on to the financial metrics. As of December 7, 2025, Luckin Coffee's market capitalization stood at $10.17 billion US, with its shares trading at $35.90. The company continues to deliver strong returns, posting a 12.66% return on assets and a 27.39% return on equity, signaling solid profitability and efficient capital allocation. Luckin currently does not pay dividends, opting to reinvest profits into store expansion, technology upgrades, and international growth opportunities. Now let's look at the revenue. Revenue from 2021 to 2023 surged rapidly, reaching 24.90 billion renminbi in 2023, driven by aggressive store expansion and strong post-pandemic demand. In 2024, growth slowed to 38.44% amid an intense price war, but revenue still climbed to 34.47 billion renminbi. In the first 9 months of 2025, Luckin Coffee generated 36.51 billion renminbi in revenue, already surpassing its full-year 2024 revenue. Luckin's profitability continues to strengthen. Operating income rose from negative 0.18 billion renminbi in 2021 to 4.26 billion renminbi in the first 9 months of 2025, with operating margin expanding to around 11.6%. Now, let's turn to net income. In 2023, profits surged nearly sixfold, with net income climbing to 2.85 billion renminbi, driven by rising store efficiency and rapid-scale expansion. In the first 9 months of 2025, Luckin Coffee generated net income of 3.08 billion renminbi, with net profit margin of roughly 8.4%. When we turn to the balance sheet, Luckin's financial footing looks solid, with net assets steadily increasing each year. As of Q3 2025, the company reported 29.68 billion renminbi in total assets and 13.15 billion renminbi in total liabilities, resulting in a debt-to-asset ratio of 44.3%. For a company expanding as rapidly as Luckin, that represents a healthy and manageable level of leverage. Now come to valuation on December 7, 2025. Luckin stock is trading at a P/E ratio of around 21 times earnings. Not cheap, but not crazy either. What really stands out is earnings per share, up a massive 58.95% year over year. Divide that P/E by its earnings growth, you get a PEG ratio of about 0.36. A PEG below 1 suggests the shares may be undervalued relative to their growth potential. Meanwhile, the price-to-book ratio stands around 4.8, reflecting a premium valuation that already prices in much of the company's strong profitability. Bottom line, Luckin looks fairly valued with upside potential, if it can keep that profit growth brewing. Now, let's take a look at who owns Luckin Coffee. Luckin Coffee has a dual-class share structure consisting of Class A and Class B ordinary shares. Each Class A share carries 1 vote, while each Class B share carries 10 votes on all shareholder matters. According to the 2024 annual report, the largest shareholder is Centurium Capital, a leading Chinese private equity firm co-founded by David Li. Centurium beneficially owns 31.3% of total shares and 53.6% of the voting power, making it the company's key strategic investor since the post-restructuring period. It's worth noting that share-based compensation forms a significant part of overall remuneration at Luckin. Let's compare Luckin's share-based compensation to its net profit. In 2022, share-based compensation was very high at 398 million renminbi, or 81.5% of net profit. In 2023 and 2024, it dropped to 239.5 million renminbi and 364.8 million renminbi, only 8.4% and 12.4% of net profit as the company's profits grew sharply. This matters when judging management's credibility. Next, let's uncover the risks every investor should know. 1. Intense competition from global players like Starbucks, Tim Hortons, and McCafe, as well as fast-growing domestic brands such as Kadi Coffee, Manor Coffee, and even tea beverage chains like Chaji. 2. Price pressure, frequent discounts and viral campaigns, risk margin compression. 3. Regulatory risk. As a Cayman-incorporated Chinese company trading OTC, Luckin faces potential U.S. and China audit and compliance uncertainties. 4. Consumer sentiment. Economic slowdown in China could limit discretionary coffee spending. On the flip side, let's talk about where the real opportunities lie. 1. China's coffee consumption is still underdeveloped, giving Luckin Coffee a long runway for growth. 2. Luckin has the infrastructure, brand power, and digital ecosystem to capture this long-term growth. 3. Its franchise model allows fast, asset-light expansion. 4. Luckin's data-driven marketing strategy drives strong customer engagement and loyalty. 5. Potential NASDAQ relisting, which could boost investor confidence, attract institutional capital, and support a higher valuation. So, is Luckin Coffee still worth investing in after its massive comeback? Here's my take. At the current valuation, Luckin appears attractive, assuming it can sustain its growth momentum. But beyond valuation, I'm still looking for clearer signs that management is aligned with shareholders' interests. For now, I'll stay on the sidelines. What about you? Would you invest in Luckin Coffee after everything that happened? Share your thoughts in the comments below. And if you enjoy deep dive, fact-based investing videos like this, make sure to like, subscribe, and join me, Invest with CY, where we don't trade stocks, we buy businesses.